10-year note yields hovering right around 430 as the market awaits today's FOMC announcement and, more importantly, the Fed chair's press conference after. Since March FOMC, we've seen yields on a roller coaster ride, most likely due to the tariff and global trade announcements, not necessarily because of rates, but ultimately seeing a range of 385 to 460 since March FOMC. I'm going to be looking at the 420 to 440 range. That's where we've seen a lion's share of the trade since then, and looking at how the Fed may give an indication as to whether those rate cuts, which are priced into the market for July, for October, and for December, 25 basis point rate cuts at each, if those are going to hold at least for another meeting. Ultimately, the Fed chair has dug in his heels. He said the Fed is going to be patient and they are going to be data dependent, and he was rewarded last Friday by the stronger jobs number. However, each new number will present a new opportunity, and the Fed chair speaking this afternoon, if he digs his heels in again and continues to maintain that the Fed will remain patient, look for yields to move up to that 440 side of the trade. If he does acquiesce and kind of talk about rate cuts coming at some point, look for 10-year note yields to move down to the bottom of that range, and obviously a big move in either direction suggests that the market is obviously catching something off guard here. The other two things I'll be watching: stocks, which will be an emotional trade, and then gold, which has been sort of the risk off trade. Those two are obviously going to be watching. Gold prices moving, continuing to move higher near all-time highs, whereas the stock market has been on a similar ride as bond yields. But ultimately, keep an eye on 420 to 440. Those are the two levels you want to watch post FOMC.